Before we start, we have a disclosure. Please be aware of risk in the future trading. You're very welcome to follow any of our signal as long as you are on a sim. We're not responsible for your trade, and we're not your financial advisor. So whatever you want to do, please, it is at your own risk. Uh, the market right now, if you just wait 5 minutes on the auto trade, there is a line here 3902, and it is very important to decide if this market gonna go long or we gonna stay on the short side. So whatever auto trade you are using, whether it's from us or somebody else, you gotta be very careful with that number. As an example, I have an ES, um, is doing fine, and we are on $2,400 right now. If this ES break that line here, I'm gonna keep that position on the ES. If this ES not able to break that area here, then it is better to close that position and secure more profit. So it's always we need to keep our eye on the market, uh, and as we see the market now start breaking up those area. There is a double resistance. If we are breaking this double resistance, that's mean we are coming to the 39.15, and we should be okay by then. Also, for there is another trade on the ES on a different time frame. If you are using a different time frame, like a 6 range, also is, if you notice, is almost the same amount of money. So technically, once this market crossing this double resistance, doesn't matter what time frame you are using anymore, you are on the right direction. So whether you are using 6 range or 12 range or 1 minute, they're all the same. Um, let me give you another example here. I'm not a Renko bar guy, but I know there is a lot of people that like to use a Renko bar. So this is also an ES Renko bar using 12.3. Also, it is, you can see all of them with the same range. So whether you are using a Renko bar or you are using the 6 range, the 12 minutes, or the 1 minute, once this market start taking off in one direction, they all line up somehow. So whether we are using now the CL is closed, and now we are about to get long on the CL. We're gonna get a long position. Today also the YM is running. Again, I'm not a Renko bar guy, so just I'm showing you as an example. But for me, I'm not a Renko bar. And to our traders, you can use 12.3 Renko, and you should be fine. Okay, we have the 6 range already closed position, and the the 6 range. This is the TI7. The TI7 on those auto trades are not using a dummy trading stops. The auto trade is closing positions once he predict there's a change in the direction. Those are not ATR. This is not an ATR. Again, this is a blended indicators together, put on based on a price line. It is not a dummy ATR based on moving average. So there is a big difference between just a normal ATR based on a dummy moving average has no brain, and something is combined a lot of algorithm in one to generate the trend prediction. So this is a total different level of predicting the trend. It's like you're driving Pinto or a Mercedes. You cannot compare an ATR to this kind of bars. They are totally much more advanced bar than a dummy ATR. And so right now, if we see on the ES, the Renko bar 1900, YM 20,000, 2000, and we still have the 12 range and the 6 range. Took one trade today, started at 10 o'clock because usually I start right before we start the webinar. I don't want it to have the auto trade after the fact, so I try to start the auto trades when we want to start here to see the auto trades in action. And as we see, it took one trade from 10 o'clock. It was done by, what time is it right now? 10:06. Less than 5 minutes, and nailed 3,250. Less than 5 minutes work. Here is what it is. Do we need to really reload the auto trade and go for one more round? I'm not sure about that. Because if we notice here, why we don't need to run it one more time? Because if you notice, this is where the double resistance, and this is what we were worried about, and this is a very determined line to understand if this market going short or long. And we can see this market is flirting on that number. So it is sideways, and it can go below that number or can go above that number. So we don't want to mess with fire. We just wait 5 more minutes. And if you want to reload that auto trade after 5 minutes, once this market start getting direction, then it's fine, fire it up. But at the moment, we should not be just closing our eye and refire the auto trade and reactivate the auto trade to start taking the trades. We need to wait and see what we are going to do. Are we going to go below the 3,900 or we are going above the 3,900? Please, on this situation, what time you come in doesn't matter. When you see those, you gotta hold on. Another trick for a guy is not well trained. You look at the market analyzer, you can see there is trouble in heaven here. The ES is not an all 3 positive. It's only 2 positive, 1 negative. On the NASDAQ is only full 3 on a full idle. And then the YM is on the short position. This is indication the market is a chop. Once you see the ES, NASDAQ, Dow Jones, they are not organized with each other. They're not synchronized with each other. Stay away from the trouble. So what we have done, there is many solution for a guy cannot really read technical chart. There is so many other options. He can look at the market to avoid disaster in the trading. Because we cannot treat the auto trade as a dishwasher machine. You turn it on and then the US dollar is going to bubble inside the machine. So when we see the market come into this line, we hold. Whether you come in at 9 o'clock, 9:30, 10 o'clock is irrelevant. Optimization is not going to tell you what happened today at 10:09. The second things you need to look at the market analyzer on the top. If this market analyzer is not synchronized with each other, stay on hold. Do not activate auto trade. There is so many, we have developed so many things For a guy is not trained, or he don't have the eye to look at the chart to see what's going on, to indicate there is so many other options. He can look at it and make a decision. Sometimes the market spikes at 10 o'clock. Sometimes the market spikes at 9:30. Sometimes this market is going to spike 2 hours before the market close. We don't know. But what we need to know, if this market going in the right direction. So now if we see, I didn't want to use anymore the 6 range. And this is an example right now. The Autotrader start taking that trade here. And you can see the market is trying to get up and across the 39.10. And then it's going to bump into the 39.14.75. So we can immediately spot what's going on in the market while we are, so we can also, we have the advantage. As an example, if this market not able to break that line or that line, you have $1,000 here, you click the emergency button, you close your secure position. Let me show you. 1 minute you had $1,000, and now you are in a hole $300. You don't look at the market, you get in trouble. You can see 1 minute was $1,000 on the table, front of your nose, and 1 minute you're going south. This is the market. Welcome to trading. Welcome to the market. The market does not compromise with us. So the difference is, we understand this resistance line here. We understand this resistance line here. We can measure the pressure, and on that base, we don't need to learn price action. We just need to read our instruments like you're sitting in a cockpit, making decision, looking at the market pressure, see where is your resistance support, make a decision based on this one. So if we look now, it's not to do with the auto trade, has nothing to do with your optimization, staying miserably on the weekend doing optimization, has nothing to do with that, has nothing to do with your auto trade performance. What it is, the market is not able to break the 39.08. Whether you're using our auto trade or you are using different system is irrelevant. Has nothing to do with your optimization, is the market movement. A lot of amateur trading, they don't understand that. As we see now, you lost that trade. 1 second you had $1,000, and 1 second you lost the profit $1,000 plus is touching your account. Those guys are selling, the majority of those guys are selling auto trades. They cannot even trade a paper bag. They don't even have the brain to trade. By looking at what's going on in the market in conjunction with the auto trade. That's what makes you a silver bullet in the market. Without your knowledge, and you treat the auto trade as a dishwasher machine, you are going to hit disaster. The difference is between Tom and Jerry. Tom is looking at this chart. He sees $1,000. He's gonna hit the panic button on the top, close position, and secure 1,000. And the other guy is just gonna keep looking at the kitchen table, waiting on the dollar to drop on his head. And now he lost money on that last trade. Both of them are using the same auto trade. Both of them, they will not get the same results. They will not. Everyone says out there, you cannot close your eyes. Where is the money? Simple as that. So that's why the reason I didn't want to bother to mess up with the 6 range. The reason is, as we said, the market is flirting in that number here. 1 minute want to go long and 1 minute want to go short. For a guy is auto trading, into trouble because the ATR is nothing. It's just a dummy moving average above and below. And when he bump into something like this, he's going to blow his account. Simple as that. So it seems like we have an internet problem, guys. I'm aware of it. Internet today is dropping. I apologize for that. Let's look at something else. We will be bringing the NASDAQ. Okay, yes, for the NASDAQ. Actually, we were done with the NASDAQ, but I'm going to go ahead and show you. Here is a NASDAQ trade. Today was a wonderful day on the NASDAQ. I'm aware of this problem on the internet. It's dropping. I apologize. If you look on the NASDAQ, the reason I didn't want to bring the NASDAQ, today was a beautiful run on the 967, and if we are able to cross this one here, to make a decision on the NASDAQ, we need to look at the ES. Let me show you. The ES is having a problem on 39.15. You have a trade on the NASDAQ right here, 2,700. And plus you have this right here, this trade. If this ES is not able to cross this line, and the NASDAQ is not able to go above the 967, literally your $3,000 profit here is going to disappear within seconds, because the market is trying on those resistance level, and if this market is not able to break it, they're going to go down again, and you're going to kiss those $3,000 goodbye. If this market able to break, again, it's not the auto trade performance. It is a question of if this market able to break the resistance on the 967, and plus there is a heavy resistance on 39.14. So if you don't take action on those, you're gonna lose your $3,000 profit here. And this is exactly what happened. And look, you see, 1 minute you have a 3,000, and now you just cut your profit in half. And if this market your trader to sometimes nail it to the last tick on the top or on the bottom, it is sometimes impossible. But if you are happy with the number, close it. Don't try to get aggressive. So as we said, if this market able to cross the resistance and able to cross the ES, the 39.14, that trade can go all the way up to 5,000, and it did. If the market not able to cross those lines, you had a profit 3,000, the market is going to pull back, and all your profit is going to disappear. And has nothing to do with the auto trade. Actually, the auto trade is irrelevant to the performance on that trade. What it is, if this market able to break those resistance or not. Simple as that. So, and we cross this line, and now we come into the, practically, guys, this is if this market able to push a little bit further, we can have a potential 39.25, max to the 39.33 before 12 o'clock, and then you kiss this market goodbye for the morning session. So right now, the market, again, look at this. The Nasdaq is struggling on the 12,000 number, and the ES is struggling on 39.22. So when we are auto trading, we should not be looking at PNL. Is irrelevant. What we need to look at, if this market able to break it, or should I take my profit off the table? Now, once we understand that, once we understand there is a resistance and a resistance here on the ES, and now you are flirting around 4,000 on that trade, in the middle, minimum 3,000 should be a profit on that trade, maximum 5,000 should be on that trade. So we are flirting in between the 3 and the 5, and the best decision is to monitor the pressure in the market is right there from 1 to 30 minutes, 1 to 30 minutes, 1 to 30 minutes, and 1 to 30 minutes. So we can see on the ES, the higher time frame is weak. On the right now, on the decision maker right now, the smaller time frame, there is still strength in there. On the Nasdaq is a better picture. There is more positive than negative, and there is only just the 5 minutes troubling. So this is where a trader, not an auto trade, a trader should make his decision to take this money off the table, stay in the trade, or just cash in and run. The smart trader is not the one who makes more money. The more money you make in the market, the higher risk you are. The smart trader in the market is the guy who recognizes his borders, close his position, and run. This is the smarter trader. Not the smart trader is the one made the $5,000 on that trade, or the $3,000 on the trade. The smart trader maybe is the one who made $4,000 on that trade and ran. If the guy made $5,000 and stayed in the market, he's a lousy trader. You don't measure people by their PNL. You measure the people or the trade by understand his limitation and run. All this information about PNL or someone bragging about PNL, he is an amateur trader. Let me show you. On this Nasdaq, you had, go back to this video a minute ago, 1 minute ago. Not 1 day ago, not 2 hours ago, 1 minute ago, you had 5,000, a little above 5,000, you had 5,400. Within the minute, you smoked away $2,800 within milliseconds, and you tell me you are a good trader or you are a bad trader. I'm not going to say anything. A guy does not look at the market. This is a small example, guys. On the Nasdaq today and on the ES, you just blow a few $1,000s in 1 day. And if we look at this trade right now, you just blow your $5,000 away. Now here's the question is, well, I can use a trailing stop or a stop loss. On this, of course, we have auto trades. You can use a stop loss, and on this one here you can use a stop loss and you can use a trailing stop as well. But if you look at those videos from yesterday and the day before yesterday and the day before yesterday, when you are trying to do swing trading, you cannot use a trailing stop. And the market, as an example here, any given market, whether it's in minute take range, let's take this one here. This is a smaller time frame. You know, it's so sad when someone when I sell a wash machine and he don't know how he trade, and he don't give knowledge to his customer what's going on in the market. He just wants you to concentrate on the P&L. Let's take this one here as an example, because this one here it was right in front of you. If you are using a trailing stop and you are using, as an example, 6 range, you take the trade. By the time your trailing stop somewhere around there, the market turn around and stopped you out. Instead of making $3,200 on that trade, you made $200. You might say, okay, I'll take another trade. What is the big deal? Here is the $1 million question. Traders thinks Autotrade is a dishwasher machine. They don't understand. Every time you're Autotrade taking a trade, you are risking, you are exposing your account to the market. We don't know, you don't know, I do, you don't. You don't know if this trade is gonna make it or not. The reason is you're not looking at the technical chart. This is a problem. So every time your auto trade is igniting a new trade, you are on a newer risk. Very important. So when the market goes in here and you get stopped out here, and I'm using a trade, you can use on this auto trade trailing stop and stop loss and all kind of break even. We use the latest technology. There is so many options, so many entries on those auto trades. It's unlimited. You take another trade, and if you see the market pullback knocks you out, you are dealing with commission, you are dealing with slippage. If this market going fast, you're gonna lose a few ticks on the way in, on the way out. Then the market ignite, then you come back here and you get stopped out. Then you take a trade in here, then you get stopped out. So there is one thing here, it's been lucky in this direction because this market was trending, okay? And you got 4 trades, and there were all those 4 trades on the same direction, okay? Can we say the same if you're auto trade using a trailing stop, and you can see how this market pulled back, and how about when the market gets chopped? How about when the market gets flat? How about the market when it gets pulled back? You'll be brutally losing money. So the trick is, in any kind of trading, whether you are auto trading or manual trading, the less trades you take in the market, the smarter trader you are. The more trades you take in the market, the more you are a disaster trader. Simple. You can go to Las Vegas and sit on a gambling table, and you're going to be shoveling those cards one after the other. Eventually, at the end of the day, you're going to lose all your money. The smart guy goes to Las Vegas, he sits on the table. When he have a win in hand, he leaves. Those guys, the ones they think Autotrade is a dishwasher machine, he want to turn it on day and night. Stay away from him. He is a black magic, negative person. He will never survive in this business. He's just a tourist in the market. He put his hands together and he leaves this trade-in a matter of a month or 2 months or 3 months. He's just a tourist in the market. He's not here to stay, and he will never stay. And he will be always making noises till the day he dies. There is no such a thing, what you hear on the advertisement, that the market is going to pump out money for you day and night. If that's the way you think about trading, leave it while you still have a little money in your pocket. All those promising dreams they are giving you, or when the guy don't know how he trade but he want to sell you auto trade and just show P&Ls after the fact at night, he care less if you lose your money or not. He's not going to sit down and wasting 2 hours like I do every morning trying to educate normal people for free. So always try, when you are taking a trade and it's going to your direction, keep it alive. Every time you take a trade and go into your direction, try to maximize that trade. The biggest mistake we have seen, I've been around 27, 28 years. We've been in the public for 15 years. The biggest mistake you see when a trader account is damaged, and what he does, he tied up the trading stop, and he sees a trade with 200, he want to take it because he is desperate to regain the money he lost from his mistakes. It's a wrong move, because let's say you started on $5,000 and you thought the trading is just a dishwasher machine, and now you blow $2,000. Now you are panicking, and now you see $200 of profit. You want to grab it, trying to regain some of your money. This is what we have seen training people for the last 15 years. The same mistake over and over again, where it's the opposite. Because you lost money, because you are in trouble, you cannot use a trade with a tight trading stop and a stop loss, because you're no longer in that category. Now what you need to find, something like this, one hit, one shot, can regain some of your losses. If the auto trade taken a trade and didn't go to your direction, you can always override the auto trade and close it, or you try to break even, so you will not be on Also on that auto trade, I have some of them only on the break even. So in other words, on this auto trade, I don't know if I have any right now. I don't know where it is. Some of them, they are on a break even. On this one, on this kind of trading. What does that mean? Once these ES break the 10 ticks up or down, you will break even plus 1 tick. That's all what you need when you are in trouble in the market and you lost some of the money. Why we do that? Why we avoid the trading stop? The reason is when you break even, if this market goes the opposite direction and knock you out of that trade, has no cost for you. It does not cost you money. Then you survive to the next trade, trying to catch the next trade. If this market go into your direction and you are in trouble in the market, once you see you catch a trend, stop. Why? This is another example. Let's look at this chart because we started in this chart this morning. There is no rules in this market. There is no rules in this market. My rules, your rules, what you hear in trader rooms. After you pay the money, they tell you you didn't go by the rules. There is nobody rules here. There is no rules where the money need to be made. There is no rules. The market don't care about your rules, my rules. Your beautiful brown eyes, green eyes don't care. Anyway, the market spikes one time a day, normally. And then it goes sideways. Sometimes the market spikes 9:30, 9:25, 10 o'clock, after lunch, on the last hour. The market spikes once a day. When you are auto trading or manual trading and you catch the spike as you see here, let me show you something. What happened after the spikes does not mean you are a brilliant trader and now you're going to double up your 3,000 to 6,000. Is the opposite. If we look the pattern on the ES on any given time frame, the ES is spiked. What happened here? When the market is like this, one line, plus minus couple bars. This is a turbulence, can make you lose all your account in this area here. This area here, make money. This area here, lose money. Simple. Beautiful, beautiful women make you buy beer. Miserable women make you drink beer. The same thing here. Beautiful women make you buy beer. Miserable women make you drink beer. And there we go. Simple as that. Remember that. So, after every spike, you're going to have a sideway. And this way, where you start losing money. And you should be smart to stay away from the trade once you catch the spike. So for a guy, a trader, is in trouble and lost money, they've been doing the same mistake. They're using a trailing stop where it's the opposite. They should catch a trend one time a day and leave. This is the smart, brilliant trader. Not that guy sit on the internet, I made $1,000 today. He makes $1,000 today. He makes $10,000 today. And tomorrow he's going to lose $20,000 a day. This guy is just a fast train and is going to hit the wall any day. and a break. This is the smartest traders, especially those guys. They think, like when they, if I buy your auto trade, how much I will be making next month. I tell you how much you will be making next month. One big banana. That's what you're gonna make next month. If you're not looking at the chart, don't even bother to be in this business. Go away. Buy a container banana and sell it somewhere. You will be much more profitable. You don't need to be in the market to do that. So this is the things that misled those amateur trading. They're misled by those at night. Somebody come in with a stupid ATR and telling you today the ES made 1,000 or 2. How? Where? Explain. He cannot explain. He don't have the brain, neither the knowledge to teach his own members. So don't go on those wild dreams. Keep your eye. Today we have some people we were looking. We have a lot of YouTubers trying to predict the Bitcoin. Today I was watching it. I don't want to do this on this channel. But what I noticed, the Bitcoin become going the same direction as the Nasdaq. Before I did go live, I was looking at the Bitcoin chart, and when the Nasdaq hit the high, the Bitcoin hit the high, and in here somewhere, when the Nasdaq start dropping, the Bitcoin will start dropping. Yeah, it's right there, I think. Let me see. Yes, exactly here. Anyone out there, look at 938. I don't know now where is the Bitcoin, but at 938, if you look, the Bitcoin was on the high level, and the Nasdaq was on a high level. When the Nasdaq dropped, the Bitcoin dropped. Let me simplify that for you. For the ones that's been watching me for a few months, we have showed you that the Nasdaq has become independent, but yet can stop when there is a major level at the ES, which not a lot of traders are aware of that, because there is some traders, they don't look at the ES because they say, I'm a Nasdaq trader. Okay, you are a Nasdaq trader. Despite you are a Nasdaq trader, you need to look the ES, because when the ES is coming to the major area, Nasdaq stops. If you analyze this Nasdaq chart, plus minus a few ticks, working in parallel, very rare. The Nasdaq go up and the ES goes down. Very rare, not unless some kind of news have interrupt the market. But so, if we want to really to trade the Nasdaq, we need to look at the ES. Okay. And now we have the Bitcoin is working parallel with the Nasdaq. And this is something new. This is something new for the last few weeks. The Bitcoin is going parallel with the Nasdaq. Do it yourself. Open the charts and you see. And we know that in the future, the Nasdaq stops on a major area. When the ES has to cross, the Nasdaq stops. So when I'm trying to connect those together, ES NASDAQ, Bitcoin. The NASDAQ wait when the ES has to cross major point, and the Bitcoin for the last few weeks is following the NASDAQ. Here is where is the problem. 20,000 brilliant guy using indicators trying to predict the Bitcoin, Ethereum, and now is going to the moon. And this one is going to the moon. And this one is going to the moon. And the only one is going to the moon is his brain. Because the way he's smoking, his brain is already in the moon. But he's still on the ground. So it is a good news, because now, if this really the Bitcoin and the NASDAQ, they start working together, it means money. So it's too early to call it, but if you look at those two, they are working in parallel. It could be because now the institutionals, I know everybody talking about institutionals and all this to the Bitcoin, and they're going to jump in, and we're not just going to go to the moon, we're going to go to some different, even a planet. But those guys is already, those joints they smoking, they are already on a different planet. They don't need the Bitcoin to be on that planet. So this is a very good news. So in other words, that's what we have said before. And let me tell you, even the DAX in the morning, if you want to trade the DAX is in Frankfurt, is in Deutschland, and the ES is on a different planet and is in the USA. And still, if you want to trade the DAX, you have a privilege, you have an advantage by looking at the ES, and you make a decision on the DAX. And what is the DAX? The DAX is Deutschland, is in German. So here it is. The ES, it is your flashlight to your Bitcoin. Your ES is a flashlight to your NASDAQ. Your ES even is a flashlight to your gold, to your 30-year treasury bond, to everything in the market. Your ES is a flashlight. Without the ES chart, you're blind in the market. And you will always stay blind. In the last 15 years, people rejected this. And they keep going on the optimization, whether that Autotrade from us or somebody else. Let me make a shortcut for you. You think you are smarter than me and the market, and I respect that, and you probably are. Let me give you one piece of advice. For the last 15 years, I have not seen one trader make it in this business with his eyes closed. If this makes sense to you, then go ahead and open a minute chart, not a ranker bar, a minute chart, and start enjoying the view while you are auto trading. And this is a story shortcut. The ones before you and the ones that are going to come after you, they will fail if you don't look at the 1 minute chart. ES. The ES, it is your flashlight to your life, to your profit, to your portfolio, whether you are trading cryptocurrency, whether you are trading NASDAQ or stocks. We have a lot of traders trading stocks. The key is right there. It's not the key to having by some guy want to sell you an auto trade. No. The key is to open 1 minute chart on the ES and start enjoying the view. Start. Okay, as we see here right now, the market spikes once, and now if we see this market is not going anywhere at the moment. There is nothing now. What time is it? There is 10:52, and if we look at this market, got stuck here. It is between the support area and the resistance, indicating the market is no longer trending. When the market is no longer trending and you still have the taste for trade, every single time, the ES on a standby. If we look, we don't need a genius trader. Look at this and look at this. This is a nightmare. This is no trend in here. No money to be made. Okay? And now it is only 10:54 and you have another hour. Immediately jump on the CL with no question. Every time you see the ES sideways, jump on the CL. Why? Because those older guys, the more mature guys than you are, they don't look at the market as you do, as a dishwasher machine. They know when the ES is on a sideway, they jump on the CL, they will find trends. Every time the ES goes sideways, you look at the CL, is trending. Those basic information if you're going to dismiss any of it, you are in trouble. We are honestly sharing what we know with you. And as a trader, you cannot say, I only trade NASDAQ or ES or Dow Jones or whatever. No, you cannot, Trader is a trader. When I see there is no money to be made on the ES, I will jump on the CL. I will find the direction. When I don't see the market trading on the CL, I can always find something else. I jump on the 30-year Treasury bond. Why? Because 30-year Treasury bond, if I can afford 2 contracts on the CL, maybe I cannot afford 2 contracts on the 30-year Treasury, I'll go 1 contract on 30-year Treasury bond. Why? The 30-year Treasury bond is like a tank. It does not go around like the ES. It's just solid movement. You can always find a few ticks here and there on the 30-year Treasury bond. So what I'm saying is there is always small exit. You can exit to survive. It's not what those guys come in. Sam, I want to make only 2,000 a day. Tomorrow the 2,000, 4,000, and the 4,000, 8,000. Those guys I don't want to deal with. You cannot say today I want to make 1,000. When you come in the morning, you have to evaluate your situation. If this market moving, it's going to be like a buffet table with ticks. If this market is panicking or is on a sideway, you got to be careful and fasten your seatbelt. Maybe you will make $200, $300, $500. I don't know. You don't like it, skip the whole day and stay out of trouble. When you come in the morning, whether you turn on your auto trades 9 o'clock, 9:30, 10 o'clock, doesn't matter. Your main concern is not how much you want to make. Your main concern is in the morning not to go in red. If this market moving, we're going to stay like a fleas on the back of an elephant trying to go with the same direction as this big elephant going. If we cannot fight it, we cannot move the market. If we are seeing a trouble in the market, we stay away. The attitude about I want to make you cannot say I want. Yes, I want a private jet too. I'm not gonna get one, not in this lifetime anyway. So yes, I want a private jet. I'm not gonna get it. So it doesn't matter what you want. It's what the market is willing to give you. So what I'm saying is, when you come in, you have to have this attitude, survival, not to let the P&L goes in red and get you in trouble. And it doesn't matter if today you made 200 or 2,000. You stay on this positive P&L, and if you don't like this market, how it move, just relax. Nobody is forcing you to take a trade in the market. Nobody is hitting you on your hand and telling you you must take a trade. Being on the side, it could be you are the smartest trader for today. There is nothing to be ashamed to be on the side than to sit down and burn your money on a market is not moving. As an example, if we look at this one here, if we go back from 10 o'clock this webinar today, the first word I said, be careful with this number. This is the first word we come out with on this webinar. The market is flirting around that area, and this market here, as long as it's flirting plus minus around that area, that means this market cannot find a direction between long and short. So when the market cannot find direction between long and short, why you want to jump in the market and make decision or making a bet this market is going long or the market is going short? Why you want to get in trouble when those troubles you don't need? So when you come in and you see this market flirting with the middle number between long and short, you should stay away from this one does not require knowledge. This one here does not require experience. This is require discipline. If I come in the morning, even if you are not my customer, you just come and watch me on YouTube, and you come in and you see my market, maybe my market analyzer is a few second delay because of the YouTube broadcast. But if you see on the market analyzer, I have 3 positive on the ES, 3 positive on the NASDAQ, and the YM is a wishy-washy. It's not, there is no trending on the YM. So if we wait till the YM, NASDAQ, and ES all in line, and each one of them have a 3 positive direction, you are okay to auto trade. You have the green light to auto trade. No matter what you do, your risk is much lower than when you come in and you see this market analyzer, the ES go in one direction, NASDAQ go in one direction, the YM go in one direction. It's just a drunk driver taking this bus down with one tail light, and he's gonna just hit the ground with it, with no brake, no steering wheel. You are a disaster trader. So when you see there is a mixed in the market, you should not take action in the market. You should stay away. This is the smartest trader, not the smartest trader flashing a PNL like a Dracula at night. You know, this is not a smart trader. This is a disaster trader. He shows you today he make 1,000, tomorrow he will lose 10,000. The smartest trader to tip-top around the market and understand when to get into the rain and dance with a gorilla, and when he needs to run away from the gorilla. This is the smartest trader. And everything beside that is a hogwash. Is irrelevant to the whole trading. So as we see here, this market is not doing anything. It's not. And again, I want to bring the same chart we were covering today, whether it's a minute or not. If we look after this market, because we said this market is trend spikes once a day. If we looked at this one here, spiked, what did you miss in here? Oh, I can see I can make $10 there. Oh, no, you cannot make $10 there. You cannot say, oh, man, I could have made a little bit more here. No, you cannot make it. After the fact is simple. But if you go ahead and take this chart and tell me how you're going to predict it now. Tell me. Now you're going to go short. Yes? Oh, okay, yeah, I'm making money. Oh, man. Honey, take a shower. I'm making money. Yeah. But then the market turn around on you. It does not work this way. So the market is a flat, took a little drop, and then by the time those guys start taking a trade, the market turn it around. By the time you take a trade, the market start diving back in. You cannot make money in here. You cannot make money in here. The only time you make money when the market is trending, like this. Look at this beautiful cut. This is money. And when the market was not moving, we lose. Then when the market starts spiking, we do it. This trade made 3,200. Okay? How much you think this trade made? You calculate it. The entry was 3907 and went to 3879. You do your own calculation. So for a guy is in trouble, he needs this. He needs this. He needs this, and he needs to avoid this. Because if he's going to stay aggressive, he's going to lose the rest what he have. This is an tradable area to trade. Whether you are a manual, auto trading, dishwasher trading, this is not a trending market. This is not trending market. So if we want to go back and examine the 1 minute, we can see this market sitting and getting stuck between a resistance and a support, and it's not going anywhere. What time is it? It's 11:15. That means your day is over for this morning. Your day is over for this morning. Whoever catch the spike in the morning is a happy camper. The guy did not catch the spike for this morning You're gonna live another day. Welcome to trading. Welcome to hell. There is nothing I can do for you. Again, guys, the performance is based on you, your knowledge, and how the market move. Then your auto trade perform. Knowledge with auto trade is silver bullet. Just space out and let the mechanical auto trade work function by themselves. You can make money today, you can make money tomorrow, but the day after you fail. So, folks, that's all what we have for you today. You know, we're not your financial advisor, but I think we are sharing over 27 years with you what we have seen. It works, what don't work. So, just when I was a kid, and when somebody trying to advise me, I said he's an idiot. I'm smarter than him, and thus I have experience. And you're probably gonna say I'm an idiot. I'm smarter than Sam. Yes, because I said the same 27 years ago. But I find out I was an idiot. You know, I find out I was not smarter than this market. So, and if you take my advice, take my advice. If you don't, you will find out the hard way when you start bleeding with your money. It's not my problem. But again, guys, we're not your financial advisor. We just sharing and trying to help you avoiding disaster on your account. Whether you want to take it serious or not, that's your problem. It's not ours. Thank you very much for today, and we'll see you tomorrow.